Okay, folks, welcome to another Sunday Night Futures Live. I can't believe it seems like Thursday to Sunday just goes like that. It's freaky. But thanks for joining in. Thanks for spending some time. I hope you had a great weekend. Mine was very relaxing. Beautiful weather here in New York. Let's see who's joined in. Seymour, hello. Trader Isaac, hello. Yes, smash the like button, subscribe button, please. Thank you. Joseph, good evening to you. Thought you would have over 100,000 subscribers by now? No, I don't know what the heck it is. No. I see these kids, they have 100,000 subscribers in a year. Me? I don't know what the heck it is. So, anyway, if you have any ideas, let me know. Drives me crazy. All right, so we have JW, Paul, M. McNeil, hello. Welcome, guys. All right. So we have the futures market open. We're going to talk about the futures. We're going to talk about the events that are going to be coming out this week, both economically, earnings-wise. We're going to be talking about some major concerns that hit the headlines earlier regarding the big banks. And we'll talk about that. We'll talk about the relationship of Bitcoin to the S&P 500. It does look as though there is pressure following through on the S&P 500. I was asked the question of which leads what? The S&P leads Bitcoin, or Bitcoin leads the S&P 500 after I released that video today. And I said neither. It has nothing to do with either one of them. It has everything to do with cheap money and sentiment. That's what it has to do with. So we're in a speculative bubble. And neither one really affects each other unless, of course, they take a big nosedive, as you saw today. That makes speculators freak out. So that's what drives that convergence or divergence. So more to come. Let's first kick things off with a note from our sponsors over at TrendSpider. Folks, don't settle for ordinary trading software. Go with automation. Automate your grunt work, speed up your technical analysis, and improve your accuracy. I'm going to be going over a bunch of symbols tonight. You're going to see me go through them with pretty good accuracy within a half hour, probably 10, 15 symbols. So if I can do it, trust me, you could do it with accuracy. Reduce costly analytical mistakes, find winning chart setups, and time your trade with precision using alerts. If this, then that. It's a rules-based approach. If we break out on an alert, we buy or we add. If we pull back and we test support and alert fires off, we buy. So we don't need to stare at the charts all day. So this is truly the trading software for traders with day jobs, and that's what my service caters to, traders with day jobs. So don't hesitate. Begin your 7-day free trial offer. Go take their demo tour. They have TrendSpider University. I give it away free to silver and gold level members. I use the levels of membership given away to gold level members. So what I use, you'll be seeing. So take advantage of it. Use the link below, 35% discount code, cheapest price on the web. Let's go to the futures action. Okay, so as I noted today in our best stock charts, which I sent out earlier, major concerns with regard to Bitcoin and the rate of change that it dropped, and you're seeing it reflected somewhat on the S&P 500. But let's face it, the S&P 500 is very, very extended. So we're down at current. We're off the lows. This is a 4-hour chart. We'll circle back right before I log off tonight. We'll go for about an hour, and we'll see. Do we rally back? Do we turn green? For all I know, we don't know yet. So we have gap down. Do we fill the gap? Do we roll over? Or do we begin to break out to new weekly highs? We don't know. We're not that smart. The markets will tell us. Let's take a look at Bitcoin. Wrong chart list. There we go. Yeah, so here's Bitcoin annihilated. We're going to rally here soon. We're going to rally here. Or at least at a bare minimum, trade sideways because we're trading down below the 3 standard deviation Bollinger Band. Absolutely annihilated. Here's a 15-minute time frame. Expect to pop back here really soon. Let's see where we're at on a historical basis. We have support in this range here. Let's use the lows of the week of the 5th of April. That low was 55,675. That's still around $1,000 away from where we're at current. So they may push it down a bit lower before we bounce, but it should happen pretty quickly. Back to the 4-hour chart. Here's where I think we're going to bounce. Let's create an alert. Okay, we're good to go. So that's Bitcoin. Weak and probably going to get a little bit weaker before it pops. But I'm going to go to a monthly chart in a moment. I'm going to share with you why I don't believe the rally in Bitcoin is going to hold up. So as a short-term swing trade, sure. Buy it on the dip as it hits support. Let it rally, then get out. I'm going to share with you why in a moment. Let's just get through the rest of the futures action. The NASDAQ 100 down 1/3 of a percentage point. So a little bit of weakness here. $15-minute chart. Yeah, we need to really rally back quickly here. Let's create an alert. If we begin to break down below these support levels here, the NASDAQ's in trouble. Looks like we're trying to fight back a little bit now. But again, prior was logging off tonight. I'm going to circle back. It's early. We want to see how things settle out. The Asian markets are not yet open. Dow futures holding up a little bit better. No great shock. Back to the 4-hour chart. All right, it's at this point I want to know what the dollar is doing. I also want to know what bonds are doing. So let's go with the US dollar first. The dollar, I think, is going to rally here. We're still down net versus Friday's close, but the open here on Sunday evening is looking promising. We had, in the past 3 trading days on a daily time frame, 2 doji star formations. That's a sign of indecision on the dollar bull ETF, the UUP, if you want to go check that out. So that's a sign that we're probably going to pop here short term, longer term. The dollar is going to fall apart. Let's check in with gold. Gold pulling in on dollar strength, no great shock. But if we see fear, if we see the VIX begin to spike, you can see gold, you can see the US dollar rally up in tandem. That will not last. When the fear comes off, that correlation will come off and they will begin to trade inversely yet again. So don't be shocked if the dollar moves up higher and equities are weak that we see gold break out along with the dollar rally. Hey, Sam. Good to see you, pal. All right. Germano, I haven't seen you in a while. How you doing, man? If we have time, I'll be more than happy to get to them, pal. I can see the list already building up here, and I have to get to members first. So if I have time, I'll definitely get to at least one of them. Okay. Green Bob. Wouldn't have used BlackRock money, but okay. All right. So I just want to make sure I'm not missing any questions. Larry, 13 days to the Kentucky Derby. Very important information. Thank you, Larry. That's your PSA for today. Okay. So that's gold. Let's check out silver. Silver pulling back, no great shock. All right, let's check in with bonds. Now, here's where the problem could begin for the markets. If bonds broke out, here's a 4-hour chart, right? We broke out on Thursday. We did a bunch of retests here. If we fail to hold this support level, that means yields are going up. And stocks are not going to like that. Maybe your transports, your banks, they're going to like it. Your tech stocks are not going to like it. Energy, you'll like it. But right now we're holding support. I didn't go over the Russell 2000. I have a short position here. And I want it to crash. But it's not. All right, so we're down 0.2% on the Russell. All right, what else do we want to go over here? Natural gas. Natural gas is looking pretty good. We have a new weekly high already. We're off the highs of the session, but a new weekly high. Let's see if that comes back in. I want to take a quick peek at commodities, meaning agriculture, get a feel for what they're doing. We don't have to go through the whole spectrum. Soybeans will do. They are down at resistance. Let's check in with another one. Corn. Let's see what the VIX is doing. VIX is moving up. So the VIX was at the lower band of its trading range late last week. It's been really, really weak of late. Here's your upper band here at around 1839. Let's circle back really quick to the S&P 500. It has come off of its lows. Let's do this. I want to know if we put in a new session low. Okay. And again with Bitcoin, and then we'll head over to some topics I want to talk about. Man, yeah, we're gonna hit the support level. So weak. Okay. I don't want to stare at it. All right, so let's take a look at some events that are coming out this coming week. Economic data is really not going to mean all that much by and large because you have earnings season this week, right? So it was big week last week for earnings. The big banks, really, really good earnings. But I have some bad news about the banks. I'm going to show you in a second. It's pretty wild. So I had to share it. So coming out this week, very light. Very light. Until Thursday, where we get initial jobless claims. And then we get the PMI manufacturing numbers. That's a purchasing managers index that comes out. Otherwise, a very light week, which would normally be bullish for stocks. Not much to derail the market. But this Bitcoin issue is not a good issue. That's gonna shake people. Talking about earnings, we have a lot of Dow stocks coming out this week, a lot of regional banks coming out, some transports coming out. So it's going to be chock full of earnings this entire week. IBM announces tomorrow. A lot of transports, some airlines, railroads. I think Wednesday in particular is a very, very heavy day. More big banks, Credit Suisse. So a lot going on this coming week. Expect volatility. Intel announces this week on Wednesday. So as I like to do each week, not that I'm always going to do it. When the market becomes rational, I'm going to stop doing it. But I want to go into the valuation of the market, where we stand from a Shiller PE ratio perspective and the Buffett indicator. Have we changed from last week? We sure have. We've gone up. So despite the fact that big banks reported earnings that beat expectations last week, overall the Shiller PE ratio rose to the highest level since the deflation of the dot-com bubble. Now, when you take a look at the Buffett indicator, I mean, they got to put up a line here representing a 3 standard deviation. Here's a 2 way down here. And I don't really talk about this as much, and I always mean to. Values greater than 2 standard deviations above historic trend occur 2% of the time. We are near 3 standard, if not at 3 standard deviations beyond what is fair value. It's nuts. Taking a look at, this is from TrendSpider, taking a look at the new trading week. Last week, seasonality-wise, going back the past 10 years, we were up 70% of the time. That worked out. This coming week, and this should be noted, that we dropped down to an average of up 50% of the times next week. The week thereafter, only up 40% of the times. The week thereafter, up only 20% of the times. So we're going to head into a trough here over these next couple of weeks, where you should expect, using seasonality, to see the markets perhaps lose a bit of momentum. Now, taking a look at what I teased at earlier, and this was astonishing to me. JP Morgan, total loans versus deposits. Total deposits are skyrocketing, but their loans are flat. They're not making any additional loans, they are really minimizing risk. So the question I always ask is, what do they know? What are they concerned about? And it's not just JP Morgan. Bank of America. Their loans have flatlined where their deposits are skyrocketing. They're not lending out that money. Citi, same thing. Wells Fargo, their deposits are skyrocketing and their loans are dropping off of a cliff. What are they worried about? That's a rhetorical question. Here's the big four in aggregate: JP Morgan, Bank of America, Citigroup, Wells Fargo. These are the big money center banks. These are the guys in the know. Total deposits up huge, loans flatlined. Scary stuff. Now, when we're talking about Bitcoin and its correlation to the S&P 500, you have the S&P 500 overlaid here in gray, and you can see that the S&P 500 becomes so speculative, it's now, or it has become, a greater performer on average than the shares of Bitcoin. Think about it. And here's the correlation. The correlation is they trade roughly together 79% of the times. No great shock that with this drop in Bitcoin that you're seeing the S&P 500 pull in as well. And I don't think the selling in Bitcoin is done. Why? Because of this. Take a look at a monthly chart. And this is no big deal until it becomes a big deal. RSI was as high in mid-March of 91.28. We've traded sideways, the bias to the downside. It's come off a bit, but we still have RSI on a monthly time frame of 87.22. We haven't been at these levels since back here in 2017. So we can go lower. And if you add on your Bollinger Bands, in blue is your upper band. We're trading well above the upper band of the 2 standard deviation. If you want to change it to a 3 standard deviation, you know, we kissed it and now we began to back off. So we're still very, very extended on Bitcoin. I don't believe that this is a dip to buy for a longer term investment. Note where we popped today. Wow, this is a huge move today. This is a 3 standard deviation move today. We bounced right off the 3rd standard deviation Bollinger Band. On volume. Beware, folks. So we may get a counter trend move back here on Bitcoin after we hit support. They're trying to consolidate it now. But I think that rally is to be sold. And it's probably going to be a vicious rally to the upside. I want to talk to you about speculation. I shared with you earlier, I was asked, after I posted that video, which wags what? S&P wagging the price of Bitcoin or vice versa? I said neither. It has nothing to do with one correlation with the other. The correlation is driven by none other than the Federal Reserve printing a lot of money. There's a lot of speculation out there. You're not seeing volume to the upside. You're seeing the retail investor chasing the market at its peak and institutional money sitting on the sidelines. So you take a look at margin debt. You want to validate what I'm saying here. This is from, I guess it's appropriate to share this, from Yardeni Research. This is Ed Yardeni, smart guy. And this is posted as of the 16th of this year, of this month, I should say. And the margin debt, here, let's just cut to the chase. Margin debt going back to 1995. Look at this parabolic move up higher from the trough of 2020 to present day. This is unsustainable. Just like this was unsustainable, this was unsustainable, this is even more unsustainable. And we've never seen a year-on-year percentage change in margin debt this great since the dot-com crisis. So I'll share this so you have this for your own reference. I think it's valuable to read. And that way, kind of keep yourself out of trouble, because this is reality. Unless earnings just blow away expectations, this is reality. We are very, very expensive on a PE ratio basis. I don't care what Kathy Wood says. The Buffett indicator strongly overvalued to nosebleed conditions. Banks are not lending money. They're tightening up. They have plenty of cash on hand. They're worried about something. And you're seeing speculation in Bitcoin, SPACs. They're getting hammered. So be careful here, folks. The market's sending us signals. All right, let's do some chart requests. I have, let me go refresh the members area. All right, Cena, Nestor. We have XONE, HGV, AL, and we'll take some from the gallery. Let's see what we got here. I need to make a list because I lose track. Buster Stacks, how you doing, man? RJA. Uranium, URA. We'll take a look at that. That had a rough back half of the week last week. But I think longer term is going up higher. GME, AMC. All right. FCX. FCX I went over earlier on best stock charts. If you want to go over, I posted it on YouTube today. I spent a lot of time on that. So, Mr. G, I'll go check that out, okay? So I'm not repeating myself. ZM. Macarta, thank you very much. Bullish on Bob, best analyst on YouTube by far. Thank you very much. I just wish YouTube would spread the word a little bit. I think I've spoken controversially in the past, and they don't like it. What else do we have? ZM. Okay, let's begin. All right. XONE. All right, this really pulled back. This is a monthly chart. We did put in a new monthly low. You know, this is a very risky market. I would say that, okay, I'd be fine with a buy here off of support. We'll no doubt bounce off of this yet again. But I would stay very, very small. and keep a very tight stop loss order. Let's bring up the automated trend lines. Oh, they're already up. They don't have anything here. And I would look to add to that trade if you're right. All you're doing right now is you're testing the market. If you're wrong, you're wrong small. That's all. But if you're right and it breaks out, you add bigger. And we'll keep this active for a little bit longer. So that's what I would do here. Unless the daily chart could influence me, which I doubt, I'd want to see another retest down here. If not a retest, a breakout and a close above this upper band of resistance. The closer you can get to a Friday, making sure that we close above that resistance level, the better. Because all too often, you know, you get early week breakouts on a weekly time frame. You buy that breakout by Friday, you've had a pullback. And you're left hanging out there with a failed breakout. Daily chart. Not a bad daily chart. Doji star formation off of support on Friday. Good volume into the close, as noted by the raindrop charts. Volume was good on Friday. You may get a pop here. Watch the market, of course. So that's XONE. No rush here. Ideally, a breakout above this resistance level. If you're going to buy right here, right now, you got to use a stop loss right below Friday's lows. HGV. I like Hilton. We already, as a matter of fact, I spoke to our live stream with Cena on this one. Is Cena on? And I was bullish on this. And we did break out last week. I have an alert set here. Yeah, I have an alert set for a retest of support. So I'd like to see is a pullback and a retest of this support level at around 41.75, around there. Hey, Cena. Daily chart. Yeah, we closed above the third standard deviation Bollinger Band on a daily time frame on Friday. No rush here. I'd wait for the pullback. And you did see some selling into the close, as noted by this red raindrop on Friday. Ideally, you would have seen a raindrop that looks like these two here. Green with a fat pregnant belly on the right side. This is the exact opposite. We closed up with the however being the raindrop closed down with a big fat pregnant belly on the right side, saying what that indicates is that you saw selling in, at or near the close. You don't want that. So wait for the pullback. No rush here whatsoever. AL. All right. We'll come back to the daily chart in a moment. I want to illustrate the power of, as a matter of fact, let's do it now rather than teasing. The power of the automated trend lines. So I'm going to take them off. And they tell a story. Now I'm going to put them back on. So we broke out here on the 15th. Then what we did on the 16th is that we had a breakout point failure or a bull trap. Very bearish setup. Now, the algorithm picked up that there is a support level below. Does it hold? I don't know. I got to go to the weekly charts and the monthly charts to see how this could become a short. How the trend looks using the weekly and monthly charts from a higher level time frame. Let's go to the monthly chart first. Yeah. We're struggling here. We've been struggling for nearly 3 months with this resistance level. Again, the power of the automated trend lines, folks. Weekly chart. So here was your, here, take them off. This is such a time saver. Put them back on. Here was your uptrend channel. We were looking good. We were in a nice trading range. We hit the upper band. We pulled back. Very nice. Rallied. Hit the upper band. Pulled back nice. Then all of a sudden, we broke down. We failed to follow through to the upside. I don't like this stock. I think it's probably going to go down lower. So I would avoid until it begins to show some strength. No rush here to get involved whatsoever. And again, the daily chart, bearish price action on Friday. I don't like it. RJA. Rogers Agricultural ETN. Interesting. All right, so it's pretty evident. You really don't need the automated trend lines, but for newbies, it helps, right? We're at resistance. And there you have it. What I would do here, as a matter of fact, I'm not going to set it on a monthly time frame. Let's go to a weekly time frame. What I would do here, no sensitivity. I'd wait for the breakout. You're too close to resistance. I do believe that there is inflation in this market. We own a little egg company. We have exposure to food in our portfolio. We're going to add more. If by chance on market weakness we get a shakeout and a pullback, I want to know about it. We'll keep this active for about a month. So our alerts are set. We're interested on a pullback and a retest of support or a breakout above resistance. Just keep in mind, if you buy the breakout, you have another resistance level right up here at around 740 per share. Daily chart. Again, here's your resistance level. That's where our alert's set. Wait for the breakout. What else do we have? URA. Big fan of URA. We traded it. We made money. But it's not looking good. When I see these wicks, shadows, topping tails, call them cupcakes, it doesn't matter. This implies that you have sellers above. Weekly chart. You're in an ascending wedge formation. I think this could be bought. But I would stay very, very small because it's very volatile and you have a lot of resistance above. And they made that, they're going back to negotiation tables on that uranium deal or the Iranian deal. So something happened over in Geneva with their negotiations. Beware, you may see some market volatility here on uranium this coming week. So let that news unfold. So I would look to buy at these levels at around 1926. Stay small. Stop out on a new weekly low. At least let Monday pass. Make sure that you don't get a new weekly low so you can avoid getting stopped out. Daily chart. Yeah, we're hugging some support levels here. We're consolidating. I think longer term, uranium is going to go up higher. So stay small right now, add more on the breakout. I would refer back to the weekly charts rather than using the daily charts. A little bit too volatile, but we are in a trading range here. So uranium, longer term, interesting. Short term, interesting. I think we could easily pop up higher, but you have a lot of resistance above as known and identified on the monthly charts. So just beware. GME. I can't believe this thing is still up $100. What do they have going on over GameStop that could support this? All right. I'm just going to talk about the technicals here. I think if anybody buys this stock, they're nuts. Absolutely nuts. So let's just talk about the technicals because, frankly, it looks pretty good. Weekly chart, we've been hugging this upper band of resistance. We're looking for a pop-up higher. Let's go to a daily chart. I want to set, what are they doing to me here? Sorry, you can't create alerts on lines that have base points in the future. Place points. Oh, I see what they're doing. Okay, gotcha. No, I don't gotcha. All right. I'm removing this. And we're going to do this. There we go. We negotiated. They were open-minded. We agreed. And now we have a point at which we can watch to buy GameStop, GME. You know, this is a perfect candidate. If you're going to get long of this, you might as well buy a call spread. And what that means is that rather than buying the common shares, you wake up and you lose, I don't know, this thing could drop $50 overnight. You buy a call spread, so that means that you buy a at the money or just out of the money option, so you're long with that call, right? But you can finance a part of that buy by selling a deeper out of the money, maybe 2 or 3 strikes out of the money call option. So, yeah, you limit your upside because you've sold a call against your near the money position, but still you're long and you've offset a lot of your risk because you sold it out of the money call. I know it's confusing. Look it up. Go to Investopedia, vertical spread or bull call spread, and look it up. And that's a better way to trade this. Were I to trade this, if somebody put a gun to my head and said, you got to buy this stock, either options or common stock, I would buy a bull spread. So think about it. Much less risk. It's a defined risk trade. AMC. Oh, thanks, Ricardo. Yeah, I love you, man. you, you're building my ego. Thank you. All right, AMC. I worry about. They got so much debt. I worry about ongoing concern issues. To be honest with you, with AMC. So we'll talk about the technicals. It doesn't look horrible. It's consolidating. Let's get rid of this. And I would, as a matter of fact, let's go to a weekly chart. Yeah, that's better. So here's your lower band of support. We popped off of it last week. Very nice. Validation on the raindrop chart. You had buying into the back half of the week. Good stuff. Like that. You're in a very tight triangle formation. You're at the apex of that triangle formation. We're making a move, in all probability, this week. How it gets resolved is a different question. Let's take a look at a daily chart. These moving averages are not going the right direction. They're losing momentum. Volume wasn't bad on Friday. We bounced off the 50-day. Here's the 21-day exponential moving average. We closed down below that. At a bare minimum, you got to wait for us to close back above this 21-day exponential moving average. Ideally here, above this volume shelf at $10 per share, $10.05 per share. Let's take a quick peek at a weekly chart. Yeah, and that'll have you with a weekly breakout on AMC. So AMC would be very attractive on a close above $10. Make it a little bit higher. As a matter of fact, let's use the weekly volume shelf because it's such a speculative trade. Go with $10.25. I'm more comfortable with that. Hey, Falcon, thank you very much, sir. Thank you for the super chat. Appreciate that. Bob, later on, read what I posted about the banks and let me know your thoughts on the comment section or on the thread here, Falcon. I definitely will. You probably you leave comments on the comments section. I'll check it out for you, pal. Thank you very much. Hey, Bob, Roaring Kitty exercised his options on Friday. I love that Roaring Kitty. Let's see. Did I miss anybody? What time do we have? 6:49. I could take a couple of the NNOX. 480 shenanigans. I haven't seen you in a couple of weeks. How you doing, pal? Not much data on a monthly chart. It's not looking good. The only positive thing to say about the monthly chart, this is the first thing I look at. Have we put in a new lower low this period? We have not. Support at $32.19 per share. And here was a real nasty We broke out and then we reversed, man. And this is why it pays. When you're using a weekly chart, folks, I can't emphasize it enough. You know, you could have a breakout in a weekly time frame. On a Monday, a Tuesday, it looks great. Then by Friday, you're sitting with this mess because we broke out above this resistance level. I even had an alert up there. We broke out and a reversal bar, and now we're threatening to take out support. If we take out 2219, we're going lower. Daily chart. All right, so let's take my drawings off here, clean this up a little bit. All right, so you have a bunch of stuff going on here. I'm going to take the automated trend lines off. I do this for a reason, so you get a feel for what it looks like when I put them back on. All right, now you see. You have resistance up here in green. You have support down here in blue. I would not buy a breakout above this resistance level in green. Where I would look is here, right above this volume shelf. Shit. Here, let's get rid of this. Let's move this up. I like 38.34 per share. A close above that mark on a daily time frame, that puts you above resistance and sets you up for a rally. But keep in mind now, this upper band here in red is now your upper band of resistance. It was support here, 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 but it failed. Now it's going to act as resistance. So no big deal. Just know where your resistance levels are, right? So wait for a break. Me personally, I would wait for a breakout above 38.34 per share, a close there. And I like Friday's price action on the raindrop charts. Big fat pregnant belly into the close on Friday. That meant there were buyers in the afternoon. Let's go to a 15-minute chart. Yeah, there are buyers here. I don't know why it's reflected that way. Looks like there was some selling in the last few minutes. Maybe it's just the way that's calculated. I have to ask them about that. Oh, this is interesting. You have a potential here. I wouldn't buy off of a 1-hour chart. We're not day traders here. You have a very tight wedge formation forming. You may get a pop-up higher here on NNOX, but again, I'm going to stand by what I said earlier. We have a lot of resistance between where we break out, if we break out, and where would be a safe buy point. So I wait for that buy point. With that, let's circle back. Greenbra, URA is a poorly managed ETF. Okay, I'm not really familiar with that. I've made money off of it. If their expenses are high, different story. If you want to quantify how it's poorly managed, appreciate that. They've had non-uranium. Oh, I see what you're saying. I just read your next comment. They've added non-uranium stuff to it. Interesting. Thank you for that. Good stuff. Thank you. Do we have time? We have a couple of minutes. We'll do Tesla and XOM. And I want to circle back to the futures. All right, so far in the month, nice breakout above 720.50 right here. Do we close there? We don't know. We still have half a month to go. Weekly chart. Now, I had an alert up here. We broke out. It already got way past our buy point. Beware here. We flashed a blue raindrop chart. That's akin to a doji star formation on a candlestick chart, a sign of indecision, and a possible trend reversal on Tesla. I'm going to create a new alert. I want to know if we break through, touch, or bounce. We did see some selling last week on the back half of the week. RSI looks good. We broke out. But beware. This blue raindrop. Daily chart. Not a bad consolidation here. Not great. I mean, we faded. I don't like fades. I would say this. If yields are moving up higher, beware of Tesla. Beware of all the NEOs of the world, your SPACs, anything highly speculative, particularly in the technology sector. Beware, beware, beware. They do not like rising yields. So Tesla, it looks like it's consolidating here. If you're going to buy it, use a tight stop below 720 per share, 719 per share. Watch yields. What else do we have? XOM. We own XOM. If it does what we want it to do, we'll add more. I like the consolidation here. Thus far this month, we have a spinning top formation, a sign of indecision. What else do we have? A blue raindrop, a sign of indecision. Weekly chart. More indecision. Doji star formation on the week. We're looking for a breakout here. On a breakout, especially if there's rising yields, we're going to buy more. But right now, I'm going to sit with our position, watch for a breakout. Ideally, above the 58.62 mark, then I'll add more. Daily chart. So we broke out on a daily time frame last week. And what we've been doing is retesting the breakout point. Thursday, Friday. I think we break out fairly soon here. If the future's weaken up, well, then we're probably going to have a problem. But we'll stick with our current position. We're testing the market. Small opening position. If it behaves well, it begins to break out, we'll add more. If it behaves poorly, we'll give it some room to be wrong, but not all too much room. And we'll stop out if we have to. But otherwise, I'm bullish on XOM longer term because I believe there's inflation coming. It's here. The government just won't report it. It's here. We know it's here. It's reflected in Bitcoin. It's reflected in the stock market. It's reflected in food costs. It's reflected at the gasoline station. So inflation's here. Randy, we'll leave off with you, okay? You're a frequent person, frequent viewer. Can't leave you out. AI. I've never seen a name of a company like this. That's a cool name. I want to buy it just for the name. I may get the stock certificate. Monthly chart. This is brand new. This is brand new. Forget the monthly chart. Ugh, weekly chart. There's not a lot of data here. Makes me nervous. I need data. I need data. All right, so we'll stick with the weekly chart for a moment, okay? You got a lot of resistance here. All right, so what we want to do is try to find equilibrium. Where was their support? Where was their resistance? $77 per share. We want to see it close above that mark. It was support back here the week of March the 1st. It was resistance here the week of March the 22nd. We haven't been able to touch it since. It would be an event, a positive event, if we close back above it, daily chart. Daily chart looks pretty good. If you're very good with your stops, I would have no problem with opening a position if we break out above 70.22 and then adding more should we rally up to that $77 per share mark. But you got to use a stop loss right below last week's lows, because if it fails, we don't know where the bottom is going to be. So I would just be careful in that respect. But its daily chart looks interesting. Weekly chart looks interesting. Monthly, no opinion. So with that, folks, we're going to circle back. And Franklin, thank you. If you could smash that like button, I'd really appreciate it. Thank you very much. All right. Let's take a look at the futures. Have we settled down? Have we weakened? Have we strengthened? We'll go to Bitcoin first. We have not hit support. None of my alerts are fired off. We're trading sideways. I think we weaken up here on Bitcoin. We're going to go lower. But then we're going to pop. Right now we're watching 55.35. Did I miss a digit there? 555. I knew it was missing something. 55,535 per coin. What's the dollar doing? The dollar is pretty much unched from we last saw it. Equities. S&P 500 has not broken to new lower lows. 15-minute chart. We have not filled the gap. Do we break here? Not sure. NASDAQ 100 rallied back up into resistance, still down just shy of a 0.25 percentage point. Trying to break out, is breaking out on a 15-minute time frame. Russell 2000 now down only 0.15%. Gold down $3, coming off the lows of the session. Gold had a big breakout last week, along with the gold miners and silver. We're long of them. I'm not long of gold. I'm long of silver, though. But we are long of the gold miners and silver miners. Silver coming back here Now down just over a quarter percentage point. Natural gas looking very, very good. Very, very good. All right, folks. With that, I'm going to say, everybody have a great remainder of your Sunday. Thanks for joining in. Please, if you could, smash that like button, subscribe to the channel, and everybody have a very profitable trading week. I really appreciate you joining in, and I look forward to chatting with members throughout the week and with all of you on Swing Trading Today in the morning and on Thursday night, Stock Charts Live. If you're not on our email list to get alerted when we go live, jump on it. Just enter your email address. It's free. Thanks all. Have a great night. Be well.